What's going on, guys? Austin Zaback here with another YouTube video, and in today's video we're going to be talking about the real estate market crash of 2021 and whether or not we're in a housing bubble right now. And is the market really going to crash in 2021? Will it be 2022? And what ultimately can you really look at to kind of know what is actually going to happen? For those of you that are new to my channel, I'm actually a realtor or a real estate agent here in Arizona. I'm also an active real estate investor, and we do a lot of properties every single month. We're actually buying rental properties and we're buying and holding. We're buying Airbnb properties to buy and hold. And we're also doing what they call wholesaling, which is where we get properties under contract and we sell those properties or those contracts to cash buyers. So looking at all of the data and all of the analytics is something I'm always doing. Is I'm always trying to educate buyers, I'm trying to educate sellers, and also I want to make sure that if I'm buying properties that I'm getting a good deal and that I'm not buying them, overpriced. I'm not buying them, potentially if they're just a bad deal all the way around, or if the market is about to do something pretty crazy. So studying the market is something I tend to do regardless of whether or not I'm going to make a video on it. So I would really appreciate it if you would take just a quick moment, okay, if you're brand new here especially, and just smash the like button, and also consider subscribing to my channel, as I'm normally talking about real estate, the stock market, and pretty much everything as it pertains to money. So there's a couple of different things that I want to dive into in the video that maybe other YouTubers aren't diving into, maybe they are, and by the end of the video, hopefully you have a clear understanding of what the data looks like, and then you can make an educated decision potentially on what you think is going to happen. I want to just start by being very clear, nobody knows exactly what is going to happen, right? Nobody in the world. So if somebody's, telling you that they know exactly what is going to happen, just understand you've got to take that with a grain of salt, because I don't know, and I'm in the market every day. We're buying properties every day. I'm helping people buy, I'm helping people sell, I'm helping first-time home buyers, I'm helping, all sorts of different people, and I myself don't even know exactly what is going to happen, but I do have some decent guesses as to what is going to happen. So obviously 2020 was just a crazy year, and nobody could have ever expected in a million years a pandemic to happen, okay? So when you look back, right before the pandemic, right before March, the market was really hot, okay? And they actually expected 2020 to be a bigger year in terms of total homes sold for the entire United States of America than 2019. In 2019, we broke a lot of records in the real estate industry. Now, obviously March, April, and a little bit of May, we saw the amount of new listings coming on the market and the amount of homes selling pretty much come to a standstill, but not for very long, right? It then picked right back up and it basically skyrocketed, and we're actually expected to close out the year higher than initially anticipated at about 5.7 million total homes sold in the United States in 2020, and that is actually up almost 5% from 2019. Now, we're obviously focused on residential real estate, and primarily we're focused on resale real estate, right? Right now, I'm not talking about new builds. We'll talk about new builds though in just a minute, and new builds is kind of an interesting topic, and it definitely plays a role into kind of the overall, what the market is looking like, right? But at the end of the day, there isn't one particular variable that is going to determine the outcome of any crash or any bubble or anything like that. There's a lot of variables. Obviously we have supply, we have demand, we've got interest rates, we've got multiple variables that we're going to talk about in the video, but I just want you to know that there isn't one particular variable, in my opinion at least, that will ultimately cause the market to completely move one way or the other. I think, in my opinion, again, it's a combination of at least a couple of variables that will cause the market to pivot in a massive direction. So just diving into a couple of different variables, there are a couple of variables. Again, Zillow's talking about this, NAR, a National Association of Realtors, is talking about this. There's multiple websites out there that are talking about this, but going into 2020, we already had a really high demand off the bat, right? We're seeing a ton of millennials get into the real estate market to buy a home, right? They're buying their first home ever. And then actually the generation right after millennials, I believe they're called, I think they're calling themselves Gen Z, okay? I might be wrong on that, but they're actually also, basically starting to enter the market as well. Now, we're talking about a massive amount of people. I probably fall into this category actually with my age, but this massive amount of people is entering the market, right, all at once, and they're buying a home. Now, a couple of reasons. Obviously, they're at the perfect perfect age to buy a home. It is a huge demographic of people, but also interest rates are at an all-time low. So you've got this massive demographic of people that are working, a normal 9-to-5 job, and they're ready to buy, right? They're ready to buy a home going into 2020. And the pandemic only changed that for a couple of months. Obviously, there's people in the retail sector and the travel industry and stuff like that that are still heavily affected from the overall pandemic. But for the most part, a lot of these people have returned back to work and they're buying. So one of the biggest things that everybody's talking about, obviously, is supply and demand, right? And you're gonna hear everybody talk about this, and it is definitely a large factor in any real estate market, right? What is the supply overall of new houses coming on the market? And then what is the demand for those houses? Now, obviously, in 2020, we had a low supply and a high demand. Now, anytime you have a low supply and a high demand, it obviously causes prices to go up, okay? So, we've essentially had that. Obviously, there was basically no supply in like March and April, but then, we bounced back up a little bit, but still overall, comparatively, looking at previous years, supply's at an all-time low, which makes all the sense in the world because sellers are still a little bit skeptical of selling, but buyers have kind of resumed back to normal in terms of buying, which is quite interesting, right? And obviously we look at interest rates being really low. It plays a massive part of that, right? Because people are getting into the market because their overall payment is going to be significantly cheaper than what it would have been if the interest rates were at like 4% or 4.5% or something like that. We're seeing interest rates below 3%, causing a demand obviously to go up. So really low supply, high demand. Again, causing housing prices to go up. So Zillow actually did a study with homeowners, and basically 34% of homeowners basically said that they were kind of uncertain. They don't know what is going to happen in the market, with the pandemic, just the whole world really in general. And then 31%, they're financially uncertain, right? So they have no idea what, in terms of their job or whatever the case is, they're financially uncertain. And those are the reasons that kept them from listing their house on the market. Now, obviously we're talking about resale real estate, right? Real estate that already exists, there's already a seller living there. That is what we're talking about. But moving over to the new build, just for a minute, we have to talk about new builds, obviously. Normally, you have these new, and we've heard, right, that new builders haven't been able to keep up for a long time with the demand of new housing, right, of new big apartment complexes, etc. But especially in 2020, and I'll tell you why, and it's obviously, and again, I'm citing, there's multiple websites you can obviously do your research on this, but basically when we look at, these new home builders, there's a couple of things that happened, right? Number one, the cost of construction went through the roof during the pandemic and during 2020. The cost of labor went through the roof, right? The cost of, actual supplies such as lumber went through the roof. So builder confidence ultimately dropped a little bit, right? Obviously in 2020, there was a ton of uncertainty. The volatility of obtaining materials was, fairly uncertain. And then the cost of said materials was obviously significantly higher. So when you look at new home builders, they've definitely withheld from pouring fuel onto the fire to keep up with the demand of people that would buy a new home. Now, jumping back over to the supply and demand really quick, actually, if we compare it to 2020, it's pretty crazy. We actually see that basically, this graph represents, from the time a house hits the market to the time the house goes pending, how many days does it take? Obviously, you look at 2019, and, in the beginning of the year, it's about the same. And then, you have like this May, June area where it kind of intersects again. But then ultimately, in 2019, right, that number went up, towards the end of the year, which is fairly common, right? You get towards the holidays and the winter time and stuff like that. And then in 2020, it just basically kept going down. It went up just a little bit in December, or I believe in, December, where, it's about 16 days basically from, the time a house went on the market to the time it went pending, which is just pretty much insane, okay? Again, supply levels at an all-time low, demand at an all-time high. Again, we're gonna go ahead, we're gonna couple that with the low interest rates, right? We're seeing, the graph of the fixed 30-year mortgage. It is just going down. We're below 3%, okay, on the average 30-year fixed mortgage, which is causing, again, demand to go up, but it isn't changing anything as it pertains to supply. If anything, a lot of sellers or a lot lot of homeowners are just refinancing. They're refinancing to get to lock in a lower interest rate, or they're refinancing, pulling cash out and using that cash either for renovations for their house, or they're using that cash ultimately to pay their mortgage during the time in which maybe they lost their job or they can't afford to pay their mortgage. Let's go ahead and let's just dive into one of the things that a lot of people are talking about, right? A lot of people are going to tell you, and I agree, by the way, to some degree, that we're going to see all the people that are in forbearance right now and facing evictions. That is going to ultimately, going into 2021, cause a big problem. Let's just look at the data and we'll just go ahead and analyze it. When you obviously had the pandemic, March, April, and then what ended up happening was the amount of people that went delinquent, meaning they fell behind on their mortgage, skyrocketed, right? It went through the roof, and then that has been declining every single month since the first couple of months of the pandemic. Now, it is obviously still at an all-time high, and we're looking at that, right? We're seeing in the month of November, it's obviously December right now, we're about to go into January, we basically fell to 6.33% in terms of mortgage delinquencies. Now, it was 6.44% in October. It dropped. It normally, I believe, actually goes up a little bit in November, but anyways, it did drop. And so that's obviously interesting, right? But the thing of that is we're still significantly higher than pre-pandemic delinquency levels. So you've got basically over 2 million people that are, like, I think it's 2.2 million people or something like that are, in delinquency, and they're fairly far behind on their mortgage, okay? So, that's quite a few Americans that are behind on their mortgage that have not been foreclosed on, because normally if you go delinquent, then you'll be delinquent, and then there's a period of time, and then what basically ends up happening, keeping it very simple, is that you go ahead and you go into foreclosure, right? You go into, you default, so you're delinquent, and then you actually default on your mortgage, and then you have like pre-foreclosure, which is basically this time frame where they'll actually allow you to catch up on your mortgage, but you've defaulted, but you're in pre-foreclosure, you're waiting for the actual auction to take place, depending on where you live in the United States, and then you actually get foreclosed on. Well, with the CARES Act and with the eviction moratorium and all these different things, we've seen that nobody has been allowed, per the government, to get foreclosed on or evicted that is defaulting or already potentially facing foreclosure situations. So 2021, what I'm really focused on is will the defaults, the people that are behind, that are in forbearance, the people that are facing an eviction, is that going to cause all at one time the supply to go way up, right? Because if it did, if the supply went up all at once and the demand stayed roughly the same, give or take, then that would in theory cause prices to go down. Now, the thing with that though is we're only looking at one variable, and what I would encourage you to look at is multiple variables. Simultaneously, new home construction builders they could build way more or way less, at the same time, right? Interest rates could, although the Fed has basically come out and said they're not raising interest rates anytime soon, they could, right? You never know. So what I would encourage you to look at is what would happen if multiple variables changed simultaneously. You have things like consumer spending, you have affordability, there's a lot of these big places right now that just simply aren't affordable. You look at New York, you look at California, you look at a lot of these bigger places, and they're not affordable, right? They cost a ton of money to live in those areas, and if people don't have jobs, they can't, you tell me, right? But people can't afford, in my opinion, to pay rent. People can't afford to pay their mortgage if they don't have jobs, especially when it is already unaffordable to begin with. So you look at things like that, you look at consumer spending, you've got to look at the amount of people still unemployed. You still have a lot of people unemployed. I believe you still have right around like 11 million people are unemployed. Now you look at 2008, right, the Great Recession, or whatever you want to call, the last market crash, about 12 years ago, give or take, and you had about give or take the same amount of people unemployed that we have right now. Right now we have about 1 million or so people more that are unemployed right now than we had back then. And again, some people will argue, and I'll tell you, I watch a lot of these different videos, I look at a lot of different statistics, a lot of different articles, and some people will argue a number of different things. So they're going to look at it and they're going to say, well, back in 2008, you had a lot of subprime lending, meaning that you had a lot of people, a lot of borrowers that were taking out loans that were getting basically qualified. They should have never gotten qualified, right? The number went up, I think at one point, to like 20% of all of the loans were subprime loans, meaning that 2 out of every 10 people that were getting a loan basically shouldn't have gotten the loan, right? Where a healthy number is significantly lower than that, okay? So there's so many, and obviously, to play off of that, there's people that are going to say, well, now, lending requirements have definitely tightened up, and it's a different game that we're playing in, right? It's a totally different scenario, and it is a different scenario, right? But I would just encourage you to take all of the variables combined and really, I think then we can start to analyze, what ultimately the outcome is going to be. I do think that, in my opinion, at some point the market's going to have to soften up, right? I mean, I think, maybe it's in 2021. Realistically, maybe it's in 2022, right? Where the market is going to have to soften up a bit. I mean, it can't just keep going forever, right? In my opinion, it can't just keep going forever. Now, do I think that we're going to see a crash like we saw in 2008? In my opinion, I don't think so. Maybe in some areas throughout the country, places that are extremely overvalued, where property values have just been going up and up and up and up and up and appreciating probably far more than they should have ever appreciated. I could see those places having a fairly large dip in home prices, in home values. Places like California, where people are leaving California. I made a video on it. I'll link that actually somewhere right here or down below, where people are leaving California, by massive numbers for a lot of other reasons that have nothing to do with real estate, right? And some of them do. But, places like that I think could see a massive hit, potentially. There are going to be other places that I think can potentially be shielded a little bit for no other reason than the demand is just going to be so high, right? If you have people leaving New York and leaving California, and they're moving to places like Vegas or Arizona or Texas or wherever, then those places are going to have, in theory, right, theoretically, the demand will be inflated a little bit, which I suppose in that scenario wouldn't necessarily be a horrible thing, right, for those areas, because it could shield them from, during that time in which maybe the other areas, see that downhill kind of slope for a while. So I would just encourage you to really stay tuned, right? If you're a home buyer right now, I think that now maybe it's a great time to buy a home. I think it depends on the area. It depends on, what the comparable properties are selling for in that area. How much have they appreciated over the last 10 years, decade? And then looking at, what kind of interest rate can you get? That's a big deal, right? If you can lock into a really low interest rate, it might not always matter if you're paying a little bit more for the house, potentially, right? Just because your interest rate is so low that you're basically hedging against like inflation almost. You're looking at it and you're saying, okay, well, I can either go rent and throw my money down. Either way, I have to live, right? Either way, I've got to live somewhere. So maybe you're a millennial. You're like, well, I can kind of go buy a home at a really low interest rate. Maybe I am paying like market value, which maybe is a little bit overpriced in theory, right? But maybe that isn't a horrible thing. So it just depends on where you're at in the world, what interest rate you're getting, what your situation is. What does your income look like? Are you living below your means? Do you have enough income coming in? What are the odds that income continues to come in, even if something crazy were to happen, right? And really analyzing those variables. If the market were to dip, are you somebody that is trying to time the market and buy low and sell high? Or are you somebody that just wants to buy and hold for a decade, right? Because realistically, you could probably buy in the height of the market if we were in the height right now, even if a downfall was about to happen. And as long as you planned on holding for a long enough period of time, you're probably going to be fine, right? Because historically, the market is just going to go up. There's only so much land in the world, and the demand is always going to be there long term, right? People have to have a place to live. So it really depends, I think, on a number of different variables, and really looking at it and analyzing what makes the most sense for you, right? And that is what I try to encourage my clients, right? When I'm working with a first-time home buyer or $1 million seller, I'm really talking to them and I'm really working through all of the different potential scenarios and then just using our best judgment to figure that out, right? And so for investors, I think you should always be looking for a deal, right? If you're an investor, whether you're buying a rental property or you're buying a flip property, you should always look for a deal. It doesn't really matter what market you're in my opinion, right? In my opinion, you should always try to buy below market value, right? Because you're buying a fixer-upper, right? You're buying a property that is potentially distressed. So therefore, you're always looking for a deal, right? Significantly below market value. Therefore, you're gaining equity in theory day one. So if the market were to correct a little bit, okay, well, I've got a decent amount of equity built into that deal. So those are the things that I would do, and I do as an investor, right? Again, It just depends. My mentor did tell me though, he said, Austin, he said, you're never gonna be able to time anything perfectly because hindsight is always 2020. You've all heard the saying that hindsight's 2020. Of course, we can look back at the graphs and say, oh my gosh, I wish I would have bought in here and sold here. Wouldn't that be great if we could do that every time, okay? Unfortunately, nobody can predict it. So I wouldn't necessarily wait forever either, but I would be smart and I would definitely study things like Black Knight Inc. Okay, study things like NAR, National Association of Realtors. They have all sorts of good analytics. They have good data that they come out with every single month. Realtor.com, Zillow.com. You can scroll down and you can look at all the analytics sections of all these different websites, and they have monthly data, monthly reports that are constantly coming out. Look at supply, look at demand, look at interest rates. Look at a number of different variables. Look at the forbearance. Make sure that number is going down. Look at the total number of unemployment. Look at the rental rates. How many people are renting, how many people are moving back home with their parents, millennials, people ages 18 to 25. These are all numbers that you want to really study and you want to look at, okay? So guys, I know that this was just kind of a video of me rambling and ranting, super just authentic video. That's kind of what I'm going for on my channel. So if you're new here, again, I would really appreciate it if you would just smash the like button for the YouTube algorithm. Consider subscribing. Let me know down below what you think the market is going to do in 2021 and beyond, 2022, 2023, and so on and so forth. I'll make a lot more videos on this if you like the video. I'm happy to dive into any particular subject on this or any other subject as it pertains to real estate or any of the markets or money or anything like that. So I appreciate you for watching and I look forward to seeing you in the next one.